So we're 24 hours away from the tariffs taking effect, basically the tariffs all over the world. What effect are they going to have on the equity markets? What are they going to have on interest rates? And what are they going to have to do with your home? That's what we're going to talk about in today's video. So the highlights we're going to have is right through here. Equity markets are just getting hammered once again today. We have the VIX basically right over my head. We'll say the blood pressure level of the markets right now. It's at 23, basically double where it should be. Right through here is we have Treasury yields are falling. People are pushing their money out of the equity markets into Treasuries and other bonds, helping out bonds tremendously. Let's get over to the bond market right through here. So we have bonds up 24 ticks, means mortgage rates are coming down today. How much? Well, I'm going to show you that at the closing bell today to see how much of an effect this had. But what I want to go over first with you guys is right through here. This is an interview. It looks like he had a pretty bad night last night. This interview is going to be with Mohammed Al-Lirian. He's a head economist. He also is the president of some university. I want to get his take on it. I've been following him for years when I follow the bond markets. So let's get his take on this. And it's kind of a scary environment out there. Even when the economists like him really don't know what's going on, it's kind of a scary thought to see what we're going into. So kind of the assumptions here. Well, let's get over to his video. And then when we come back after this video, I'm going to kind of give you my take on it. And I'll give you the ups and downs as he's talking. I might not play this whole interview. It's about 5 minutes, but I want you to get the major takes from him on what should happen with tariffs when they take place, how long should they last, and what effect should they have in the markets. So let's get over to the interview.
It's the economy now with Mohammed Al-Lirian, Chief Economic Advisor at Allianz and President of Queen's College, Cambridge University. Here, though, in person, no less.
Good morning, Andrew.
Okay, so we're going to get these, we'll get the tariff numbers, whatever that even means, tomorrow. And then what happens?
So one of two things happen. Either the rest of the world agree to a fairer trading system, and these are short-term tariffs.
And they agree how quickly?
Hopefully quickly.
Well, what does that mean, quickly? Like a week or a month or
No,
6 months?
It'll take a few weeks, but the destination becomes clear that we're going to a fairer trading system. That's option one.
Okay.
Option two is they decide to put on their set of tariffs on us, and then we go through a few rounds of tit for tat before everybody comes.
Okay, so which one are you betting on?
I think it's a 50-50. I don't think anybody knows.
So that's when you guys follow me, and I'm grateful for it. It's really hard in this market to determine what's going to go on. So when there's a lot of fear in the economy, in the world, in situations like this, what normally happens is you have the markets kind of just going down. And again, the Dow Jones is almost down another 500 points today. The money's going to be taken out of here, and it's going to move into the bond market. Now, I have an interesting video that I'm coming out with later today showing you how different investments you can make and how short-term money is going into bonds right now, just to kind of emphasize how the money is coming out of the equity markets, piling into the bond market, which is representative right through here. We have the bonds now up 24 ticks. So let's go back to continue with this interview. But I want you to understand this person, he's a Wall Street economist. Now he's the president of Cambridge University. And even he's coming in saying there's a 50-50 shot of what might happen. Not very certain with these times. And that's why we're following this meticulously on basically a day-by-day basis.
That's fascinating.
And you see this in markets. I mean,
you would think that you'd bet on the other one, your second option, I would think.
No, because I think there is a case for a fairer trading system. There is a case for a fair distribution of defense spending, and people see that. The question is, do you get there in one round or do you get there in multiple rounds? And that's really important because ultimately, I think we're looking at a 50-50 outcome, and I hate saying this. This could be a major rewiring of the domestic economy and of the global economy, a la Thatcher, a la Reagan, where you get a more enabled private sector, streamlined government, a fairer trading system. Or alternatively, if we get tit-for-tat tariffs, we slip into stagflation. And that stagflation becomes well anchored, and that becomes problematic.
So here's the thing that
Here's where it starts, where you can kind of tell what political stance the person is on when they start bringing back some different questions. Here's my take on it. We know other countries tariff us. Okay, so there's tariffs there. It'd be like you going out with a friend every time you go out to dinner, and they pay 1/3 of the bill. even though they should be paying half. That might be not the greatest analogy, but I hope you understand what I'm saying. Every time you go out to dinner with somebody, they pay a third of the bill, but there's just the two of you. It's like, okay, at what point do you say, okay, can you pay half? Yeah, it might tick them off a little bit, but it's only fair. So Illyrian, you mentioned the other countries need to come back with a fairer trading policy. So that's all that hopefully is being asked right now, saying, okay, you guys are tariffing us. Well, let's do the retaliatory tariffs, and then at some point, maybe we just both remove them and have equal trading. That's what equal trading is all about. So let's get his further take on this.
I don't understand. If you just think about the politics of what you're talking about, the U.S. puts these tariffs on. What do you think the reaction is in any of the countries where the tariffs are being put on? Do you think that the people say, that seems fair, we're cool with this, and they put no pressure on their politicians or anybody else to do anything? That's when you say,
don't they already have tariffs? Don't they already have? They're
Okay,
the ones that started it. They started it.
It doesn't matter. This
Yeah,
is
it
about the
does.
psychology of how people operate.
How can they be mad at us and say, what are these Americans doing when they've been doing it to us for 50 years?
And you think that that's how they will react?
I think that's how they react.
They're going to say, "Oh, this is totally totally cool with this."
I think they fully know. I think they fully know we're the biggest economy on earth, and everybody else can leech off of us. And I think they're fully. Aren't there countries like that?
So the UK is definitely in your camp. The UK recognizes this. They know they're on the weak side of the argument, and they just want to get it.
You don't think
out.
India knows?
India does to some extent. Europe is the big problem. Europe
knows. Canada knows.
Okay, so we'll leave it at that. But basically, that's my take on it. I'll put it that way. Yeah, that person's going to get really upset, but it's like, okay, what's fair? So hopefully, just the cooler minds will offset with all this, and we're going to know over the next maybe 30 days or so what's going to actually take place, because nobody knows. Even Illyrian came in this morning and said there's a 50-50 chance of what might happen. That's not really great odds. Basically, go flip a coin. So that's what we're seeing in the markets right now. Let's get back over to this and see where bond yields are going from here. The rates haven't updated just yet, but if we go back through here, Dow Jones is continuing to drop. MBSs are now up 26. That means mortgage rates are going to come down. What will we see today? Maybe 6.6 something. We might be in the 6.6 range. Remember I said we're going to range between 6.5 and 6.75. I think we're getting into that pocket right now. So does it make sense at this time for you to maybe refinance? Well, a lot of people are out there, still trying to find that house to buy, waiting for maybe home prices to come down a little bit. We didn't see that crash, but these rates are helping out quite a bit. So if you really want to dig into what the payment would be, especially refinancing, I'm going to have two calculators down below in the description. One is going to be how much can you afford, and the other one is going to be right through here. Now, I want you to use this refinance calculator down below. There's tons of them out there, but this one is right on point because it gives you a lot of information. You just plug in the data right through the top, what your current information is. When you go down to the bottom, what I want you to do just for test purposes, put in refinancing costs, put in about $2,500 to $3,000 just for simplistic reasons, and put down here in the rate 6.625 to 6.75. See how much your savings is and what your break-even point is. If it's below 12 months and your savings is good enough, reach out to me. I'd love to run through the real numbers with you, telling you what exactly rate you would qualify for, and based on that, what your actual payment would be. So how do you find out more about me and my team? Well, just go to therateupdate.com, and we have a unique saying here. It's one application, one credit pool. We're going to shop your loan to over 30 different lenders. Now, how in the world do we do that? Well, I'm actually a federally licensed loan officer at People's Bank and Trust. That gives me a license through all 50 states as well as Puerto Rico. Here's the cool thing. We're also set up with 33, yes, I said 33 other lenders. Now, how it works is you use me right through here. I'll be your loan officer, and I'm going to navigate this entire process, because if some other bank has a better program or lower rates or just has the program that I don't have, I'll be able to use their basically their programs. We even have a program right now. It's $4,500 down payment assistance for you if you're a first-time home buyer. Check it out. See if you qualify for it. Just go to therateupdate.com. You can put in your application right through there. You can schedule a one-on-one consultation there, or you can scooch to the front of the line and just scroll down to the bottom of our website, and you're going to find our 800 number as well as my email address right down through there. So you can give us a call at 844-775-5626, or you can reach me personally at dan@therateupdate.com. And if you have questions, concerns, you need some help, please shoot me an email. If you just have a comment, go ahead and leave that down below. I don't answer a lot of those. Every once in a while I do go in, but if you really need my help, please shoot me an email or give me a phone call. Thanks for watching, folks. God bless. Have a fantastic day. Can't wait to see you here tomorrow or at the closing bell. What am I talking about? It's early in the morning. So I'll see you at the closing bell to see how all this mess ends for the day. Take care, folks. Have a great day. Bye-bye.